All right, welcome to our explainer. Today, we're going to dive into a pretty radical idea, one that's kind of rewriting the rules of money. We're talking about a world of banking, but with absolutely no banks. Let's get right into it.
So let's just start with this question right here. What if you could use all the financial services you're used to, but without any banks? Just let that sink in for a second.
Yeah, think about it. We're talking earning interest, getting a loan, swapping currencies. You know, the whole shebang. But imagine doing it instantly, with no paperwork, no waiting around for some banker to approve you, and definitely not losing a big chunk of your money to some middleman.
You know, we all know the drill with our banks today, right? You need their permission just to open an account. You're totally stuck on their schedule, banker's hours. And don't even get me started on the hidden fees and the gatekeepers who get to decide if you're worthy of a loan or not.
Exactly. Now compare that to a world that's, well, the complete opposite. It's permissionless. Anyone can join. It's open 24/7, literally always on. And everything is totally transparent because it's just run by code that anybody, anywhere can look at and verify.
So look, this isn't some sci-fi movie. This bankless world, it's actually being built right now. And it has a name. It's called decentralized finance, or what everyone in the space just calls DeFi.
Okay, so what is it? What is DeFi? Well, the simple version is this. It's a brand new set of financial services built on the blockchain. But here's the real magic. Instead of banks and corporations running the show, DeFi uses something called smart contracts.
All right, hold on. Smart contracts sounds kind of jargony. Break that down for us. What does that really mean?
Totally. Think of a smart contract like a super-powered vending machine. You put in your dollar, that's the condition, and it has to give you your soda. That's the result. There's no cashier to argue with, no we're out of stock sign. It's just code that automatically does what it promised to do. DeFi just takes that if this, then that logic and applies it to things like lending and borrowing. And that right there is a huge deal. It means financial access for pretty much anyone with an internet connection. No credit checks, no filling out endless applications. A person in a small village has the exact same access to these tools as a high-powered banker in New York. That's wild. And think about it, when you get rid of the fancy office buildings, the huge payrolls, the entire corporate bloat, the system just becomes way more efficient. And that efficiency is why you see potentially much, much higher interest rates for people who are saving or lending their money.
Okay, so that's the big idea. But how does this stuff actually work? Like, how do you use it? Let's get practical and break down the two biggest things people are doing in DeFi right now: lending and trade.
So let's look at how you earn interest. In a traditional bank, you know the deal. You deposit your money, the bank lends it out to someone else, and they keep most of the profit. You're lucky if you get a tiny little cut. But in a DeFi lending pool, it's totally different. You deposit your crypto directly into that smart contract vending machine, borrowers pay interest right back to the pool, and you get the majority of the profit. The middleman is just gone.
And we're not talking about a small difference. The yields can be massive. We're talking potentially 3 to 8%, sometimes even way higher. It's a complete game changer compared to the, 0.5% you might get at a regular bank?
Okay, so if there are no credit checks, how on earth does borrowing work? Well, it all comes down to the golden rule of DeFi, over-collateralization. Basically, you have to put up more crypto than you want to borrow. So for example, you might have to deposit, say, $1,500 worth of crypto to get an instant loan for $1,000.
Whoa, wait a minute. So you're saying if the price of my crypto dips too much, some robot just automatically sells it?
That's it. That is exactly it. And that's the catch. And it's a really big one. If the value of your collateral drops below a certain threshold, the smart contract just sells it off automatically to pay back the loan. It's called liquidation, and it's probably the #1 risk you have to understand before you even think about borrowing.
Right, and this whole idea of control is also the massive difference when it comes to trading. On a centralized exchange, something like a Coinbase, the company is holding your crypto for you. You're trusting them not to get hacked or go out of business. But on a decentralized exchange or a DEX, your crypto never, ever leaves your personal wallet. The smart contract just helps you swap it. And that's the key takeaway here. You are always in control of your own assets.
Okay, this all sounds pretty amazing. Higher yields, more control, but let's pump the brakes a little and get real. This is a new, super experimental world. It is definitely not risk-free.
Yeah, that's putting it mildly. And if you're even a little curious about dipping your toes in, you absolutely need to go in with your eyes wide open about what can and often does go wrong.
First thing you got to know about, smart contract bugs. Remember, this is all just code. And code, as we all know, can have flaws.
Hackers are really good at finding them, and they have stolen literally billions of dollars from DeFi projects by exploiting just one tiny little bug in the code.
And then you have something called rug pulls. This is just a flat-out scam. Anonymous developers will create some cool-looking project, get a bunch of people to invest their money, and then, poof, they just vanish, taking all the money with them. It happens way more often than you'd think.
And we have to come back to that liquidation risk. We can't stress this enough. Crypto markets are crazy volatile. A sudden price crash can literally wipe out all of your collateral before you even have time to react or add more funds.
And this last one, this really sums up the biggest difference between the two worlds. There is no customer support. If you send your crypto to the wrong address, or you click a bad link and sign a malicious contract, there is no one to call. There is no 1-800 number. You can't just reverse the transaction. You are your own bank, and that's both the best and the scariest part of all this.
Okay, so after hearing all that, you might be thinking, why would anyone do this? So how can you explore this world without, getting totally wrecked? Right. You don't have to just dive headfirst into the deep end. There's a smart way to do this. Let's walk through a little guide for how to get started safely.
All right, here's your safety checklist, and this is important. Number 1, just start by exploring. Don't deposit anything, just watch, look around, and see how things work. Number 2, when you are ready to try something, use a tiny amount of money, an amount that you are 100% willing to lose. Seriously, think of it as tuition for your crypto education. And number 3, stick to the blue chips. These are the big, established projects that have been around for years and have survived hacks and market crashes. We're talking about Aave, Compound, Uniswap. And the last rule, maybe the most important, if you can't explain the risk of what you're about to do to a friend in simple terms, then just don't do it. Step away.
Look, DeFi has this incredible promise. It could absolutely be the future of finance. But right now, today, it's still the Wild West out there.
You've got to approach it carefully. Be curious for sure, but have a really healthy respect for just how much can go wrong.
So now you've got the basics of DeFi. But being safe in this space isn't just about the protocols. It's about understanding the crazy crypto environment that it all lives in.
Yep, so next time we're going to tackle crypto market cycles. We'll break down the patterns of those insane bull markets and the painful bear markets so you can learn how to stay calm when everyone else is panicking. It's seriously essential knowledge if you're going to be in this space. We'll see you then.